Hi, welcome to this video day, which is on the 14th of August, and it's Wednesday. What we're going to be looking at today is what are the best pairs to trade. Okay, now in relation to pairs, you've got a lot to choose from. Now, from our perspective, we'll look at 40 a day, and we'll normally have on a small number of pairs. Now, in relation to four pairs that we really like at the moment, we picked out as four of the best. They are AUD JPY. We're also going to look at GBP CAD, USD CZK, and USD TRY. The last two are lesser looked at pairs. They offer fantastic profit potential in our view. Now, in terms of the criteria for selecting them out and why we've chosen them, I'm just going to give you our logic when we get to the charts. Now, in terms of the charts, we're going to go and look at them right now, and also obviously tips in terms of picking out the best currencies. And the tips, in terms of the best currencies, they're going to change all the time. Okay, just give you some broad, sort of guidelines in terms of finding the best risk reward trades. Right, let's go and take a look at the charts. Just do, however, keep in mind when we're doing the chart analysis, it is my view as of right now. It can of course change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 forex pairs, including our exact entry, stop and target, you can click on the link beneath this video and get live access to our member center. Also, until Friday, you can get a discount on our course. You can read about it in the notes beneath this video. All we need to do is insert the coupon at checkout. Now, we realize the US dollar has been pretty firm recently. We're priced in US dollars, and that's made our course a little bit more expensive. So it's a help for anyone who has had their currency hit by the USD. But if you're in the US, it's an additional bonus. You can use the coupon as well. Right, what we are going to do is now go and take a look at the charts, and the one I'm going to do first is AUD JPY. Right, on the AUD JPY monthly chart, just very quickly before we go and look at the daily chart. Now, in terms of all the setups we'll look at, they combine both really good technicals, so really good risk to reward, with big fundamentals and sentiment clearly favouring one currency over another. Now, in terms of this currency pair, the AUD started to gain, let me just draw that trajectory in, started to gain a little bit of traction. Sorry, I can't get it straight. I don't do a diagonal line. Started to gain a little bit of traction to the downside. But what's important is a key level has been taken out. We tried to rally yesterday, we couldn't get through it, or near it really. It's a 74 level. And you can see it provided support here, here, here. Here we bounce back. A nice blue reversal there, but we're back through the level, looking nice and weak. Big fundamental sentiment favour more AUD weakness. Where could we go to? I'll explain why I've got this target in a moment. Probably down towards 58, so that's 1,300 pips from where we are now. So we've got really good technicals, and the backdrop behind the chart is very good as well. So let's just go over to the daily chart of AUD JPY. On the AUD JPY daily chart now, and in terms of what we like in big trends is to be able to combine the technicals with the fundamentals. We want to isolate out, look and find the really big levels. We know the big level of resistance is 74, and we've already postulated how far we could go to the downside. We felt this trade was just getting in motion to the downside. You get some inevitable sideways, then the big blue that looked on to fail yesterday, so that bounce is an opportunity to sell. Okay, now come back to the technicals in a moment, but I've got quite an ambitious target, as you saw from the monthly chart. That can only be worked out from the fundamentals. The fundamentals clearly point to us getting down there at this moment in time. We've got risk aversion, okay? Japanese yen, number one safe currency. It's also generally oversold. So as long as we've got risk aversion, nervous market, yen's going to go up over the longer term. In terms of the riskiest of the majors, they're the commodity currencies, the AUD, NZD, and CAD. So what we're doing We're doing this all the time in the current market environment. We're looking just to buy safe currencies over risk currencies anytime we get a good opportunity. And it's worked quite well so far. In terms of a risk to reward on a trade, we always want plus 3 to 1. I put this one as plus 4 to 1. It's actually plus 5 to 1. I've made a mistake there. When I put first target, I actually should have said it in the monthly chart. I expect us to overrun those lows that I mentioned. Okay. In terms of doing split trades, I'll just mention this. Regular viewers will know what it means. Sometimes, obviously, you'll look at this pair. We might be looking at this pair, AUD JPY. Then you look at CAD JPY, NZD JPY. They're all similar setups. Which is the best? Well, sometimes if you can't decide one, do all three and treat it as one trade. Okay, so we very often do that. We're doing that with the commodity currencies. We basically sold them all on the yen. The yen is basically our favourite trade longer term. We've also got a big exposure to Euro JPY short as well. Okay, now in terms of the pair, we tumble down quite nicely. Bit of sideways. There's the bounce, which allows, I think, anyone to come in with good risk reward shorts. And this bounce here didn't look like it was going to continue. Why? It came pretty quickly up, yeah, on Trump and basically his delaying of some tariffs, taking off some tariffs. It's not changing the big picture. It's just weak spec shorts getting taken out because the candle went up, got to the high, slumped back, stayed there for a good few hours into the end of the day. You could see that news, just a knee-jerk reaction, really. Weak specs getting taken out. No follow through. You should have. If it was following through, I'd have been looking for a close at the high or buying throughout the day continuously, but that didn't happen. So looked like it's going to fail, and we have. Sorry, I'm just drawing a trajectory. Just basically, when we open, we couldn't get anywhere near that high. Now we've slumped to the downside. Now, in terms of this trade, you know where the key level of resistance is. 74. That is a massive level and is unlikely to get taken out, in our view. And you've got another key level in between, which is just there. So 2 levels. You haven't got that much risk against your potential reward here, and you'll be able to bring that stop down as well if we get through the lows decisively. Also, what I like about this trade is this 20-day moving average is coming down, and if it's a strong downtrend, you'll very often see rallies fade back to a 20-day moving average. So if you're a long-term position trader, this looks a good trade. Okay, I think it's good to come in now, or if you want to take a bounce or whatever. Okay, I do not see that 74 level getting taken out. And one thing to just say on this pair before I finish with it is, we have been putting up videos of our trade in it. We did come in at 75.60. Yeah, we got a nice move down, and I put my stop just too close. I brought it down to protect some profit. I put it at 72.80. I mean, we weren't too far away in terms of getting 300 pips out of it, but I could have left my stop a little bit further back. But I protected the profit, and very often I don't mind getting stopped out and just get straight back in. And when the rally failed, come back in at 71.65, and we're not trading too far away from that level now. I think it is a good short. You might want to wait for new daily lows or a bounce, but I'd have a trade in, have one in reserve maybe. Very often do that. If we break to new daily lows, pop another trade in. If we rally up, pop another trade in into first level resistance. Long-term trend following trade, I think it looks an excellent one. Now look at a pair now, which is GBP CAD, which is a slightly different type of trade to this one. So let's go and take a look at it. Right, GBP CAD daily chart, and this is not a continuation trade. It's obviously a reversal trade. The big trend is down. Now, one thing we like to look out for is the most oversold currency v the most overbought. You can do it in whatever time frames you wish. I know people do it on a monthly basis, you can do it on 3 monthly basis or quarterly. Here I'm doing it for 2019. British pound is most oversold, Canadian dollar most overbought. I think the CAD bullish news is exhausted, and I think the British pound bearish news will exhaust, or sentiment will exhaust. What you know, if you've got a really oversold currency via overbought currency, is speculators have elevated shorts. Okay, lot of shorts in the British pound, obviously. If we do rally, it's likely to be a fast, volatile move because the speculators will exit on stop. And this pair I really like the look of. In terms of, let's say, if you are pound bullish, and I know there's a lot of traders looking for a reversal, they'll look at GBP USD. Well, USD is a strong currency, a safe currency. Your better risk to reward is against a risk currency. Okay, CAD's a risk currency, pound seen as a safer currency. So it's always a good type of setup to look out for if you're doing reversals. Now, have we reached a bearish extreme in the pound? Well, markets decided that there won't be any more talks really between the EU and the UK. Odds of a hard Brexit are high. We think there will be talks. The economy, market thinks it's going into the abyss, or the majority view is that. And we did actually, I'll just point this out before I do the technicals, we did have that sell-off on GDP from the UK, which was weak. But it wasn't as weak as it appeared, and we quickly reversed back above the key 160 level. Okay. Then we've got interest rates in the UK. Market thinks that Bank of England will cut. You've had inflation data today, clearly above Bank of England's target. It's lagging data. Inflation will have risen even more because the pound has fallen. That's what falling currency does. So the Bank of England will soon have to raise rates. So that's bullish for the pound. And like all trades, so go for this, got high expected payout v risk. Now, in terms of this pair, I did do a trade actually, and in hindsight, I should have covered it. I came in long, up it came to this 20-day moving average, yeah, and we came off and slumped back, and we went red, and I took a loss on it. I should have come out way quicker. Could have got minor profit or a more minor loss. It wasn't a big loss anyway. But we didn't take the 20-day moving average out. Look at it here. 3 goes and couldn't get through. 1 go couldn't get through. 20 days held it nicely on the way down. Okay. Now, in terms of the pound, come back above 160. You now got support on those 2 candles there. Yeah, if we break out through this level, then we'll be off to the upside in my view. The stops will get run. Where will we go to? Just on a stop run, it could easily go to 170. Just so many shorts in the market. We could even run on. But you very often see it when you've got a currency, that everyone says, no end in sight to the downtrend. It suddenly just turns. You get a massive move. I'm hoping for that in this one. So give us 5-1 to this target, and obviously more if we got to the second target. But the first target's certainly on the cards, and you'll get, I think, big volatile move, which will allow the stop to be bought up. But decent risk to reward trade. Okay. What do we got next? I'm going to look at probably one of my favourite pairs at the moment, which is the USD against the Czech krona. A lot of traders look at it, I'm sure, but it's on most trading platforms. And I'll just go through the reasons why I like it. Sorry, let's go to the chart. All right, USD CZK chart daily. This is one of my favourite pairs. I've got quite a reasonable size on this one. And this pair is basically a trend in motion. It's kind of continuation trade. Now, in terms of my target, it's actually, I'm not showing the monthly chart here, but it's 26. It's way, way off the top of my computer screen by a good way. Okay. Now, in terms of this pair, why do I like it? Good advice from Bruce Coughlin here, which most traders don't kind of think about. Very often, the less observed the pair is by speculators, the better it is to trade. Bruce Coughlin, obviously one of the greatest traders of all time. Why is that? Because noise levels are less, and you get less price spikes. Okay, because it's speculators who cause all the noise, and the short-term price spikes that very often can stop us out. And we saw that in AUD, JPY. Yeah, speculators caused a big move. That candle there on Friday, which is the equivalent to the AUD JPY one, is just tiny. Okay, so a lot of traders, when they're trading in the majors, will get frustrated getting stopped out. You've got algorithms working, huge amount of specs, a lot more noise. Okay. Also, if you're looking for the best currency pairs to trade, and you're bearish of the euro, then you should look at the euro proxies to sell with the euro or instead of the euro. Because if the euro goes down, euro proxies will normally go down quicker, especially the weak ones. Like this one is USD CZK. I put USD Polish Zloty, USD HUF in the same category. So you probably get a smoother trend here because the euro's got the most speculation of all, and you could make more money. So look at the proxies. And in terms of this trade, got interested in it when it came above this 20-day moving average. And basically, you can see it. It's not getting through the 20-day. Okay? So I just think it's one to trade with the stop back behind the 20-day and up to target. I think it's about 10 to 1. It's certainly a lot more than 5 to 1. I can't remember what it is now exactly. My maths is failing me in my head, but it's a big winner if it comes to fruition. Coming up quite nicely. If we break out, we off to the upside, get a triangle there. 20-day moving average, so you've got good support there. Take her to the upside, or if she steadies back at the 20-day moving average, going way, way higher, this one. Definitely one of my favourite pairs to trade at the moment. And, the lesser observed pairs, they're always good in my view. Next one is a lesser observed pair as well. But the reason we like this pair is just due to its volatility, or major advantage of it is its volatility. It's USD Tri. Let's go over and take a look at it. Right, last pair USD Tri. Now, in terms when you're looking for the best currencies to trade, look to trade the higher volatility pairs at the right time because your money's going to work harder. What I mean by that is, the Turkish lira is a history of high volatility. It can move more in a couple of days than the euro does in a month. It really moves nicely in terms of percentages each day. Now, in terms of it being highly volatile, you only need a small position. Okay, a small position because the percentage moves are big. Basically, can give you higher profits than in a major pair, for example. So you always keep the size down when you're trading the higher volatility pairs. They are great to trade. Turkish lira, historically very volatile, and there's other currencies in this kind of group. We'll call them emerging markets for want of a better phrase, but also great to trade. MXN, USD, Mexican peso, USD ZAR, South African rand, USD Russian ruble, USD Brazilian real. If you trade them on your platform, and most brokers have got at least 2 or 3 of them, they're really good. So again, let's look at pairs. Also, what I quite like doing is trading a lagging currency of a group. Now, if we took the USD on all the currencies I've just mentioned, okay, USD's powered higher and hammered them. They're really risk currencies, these emerging markets. USD obviously a safe currency. This pair, though, you could argue the trend is still down. So I've got a feeling it's going to turn and play catch up. And it looks like it just might be about to turn. Let's see, we come up here after basing, move up. Now we're at this 20-day moving average, okay? If risk aversion gathers pace, this one is really going to roar to the upside. Now, from our perspective, we failed to take out that 20-day moving average yesterday and hold above it. We're holding above it right now, and I take that as a bullish sign. Got triple bottom there. Through the high, and I think she could be off to the upside. Let's draw trajectory in as well. Double trend line there. You wouldn't want to put your stop just behind here though. Initially I'd place it a little bit back. Got about 4 candles there that line up, 2 bodies roughly and 2 tails. So, sorry, get rid of that line. Stop back there, see if she runs. And if she runs, I think she'll just really run on high volatility. That's what I'm hoping anyway. Where are we going? Can easily get back to 620. So I'm kind of looking for a move that occurred over here to happen again. I should take the chart a little bit further left, but it was just like a kind of really smooth trend to the upside. So it's another one with 5 to 1 in terms of a risk reward. I actually think this one could get a 720 on the longer term charts. But yeah, I think the emerging markets, or as exotics as some people call them, great to trade. You get a result quick, right or wrong, and just hate sitting around in pairs. I don't know if I said it earlier, when you get in sometimes in the majors and then get a little bit of movement in your favour maybe, and it just hangs around. Okay, which is not what you want. You want to be either getting yourself a great profit or getting stopped out pretty quick. And normally in the exotics, I get stopped out very quick if I'm wrong. If I'm right, yeah, I've got some really good profits from these more exotic pairs. Yeah, so different ways of looking at finding the best currencies to trade. Okay, so I hope you found the video useful. Thank you very much for watching me as usual. Take care. Have a good day.